Hey guys, hope you are all having a great weekend. In today's video, we are going to talk about important things that we need to keep in mind going forward. There has been a lot of volatility and bullish movement in the markets, which is odd given the new reports and developments showing an even worsening global economy that is now hinting at food shortages. The situation in Ukraine doesn't seem to be coming to an end anytime soon. Inflation is out of control. Treasury yields are inversing, which, as I explained, has been the best indicator for a recession, but markets continue to rally as if nothing has happened. Let's discuss what is happening, but before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. So before we even begin talking about this week in GameStop or AMC, let's begin talking about the market and last week. Also, let me quickly say that I am still putting together and collecting evidence regarding the Boston Consulting Group. There is a lot of documentation I am going through, and putting things together has taken me more time than anticipated, but that video will be coming out this week for sure. So, the Fed has raised projected zero-ons for the Fed funds rate to 1.9%, which means the Fed is planning around 6 rate hikes for the year 2022, which is very aggressive. Important parts of the yield curve are inverted as well, reaching and some even surpassing zero. In the beginning, about a month ago, I came across various material while doing research and even speculative op-eds suggesting the Fed could be planning a deliberate recession, because if they can execute it under their own terms as they want it, it can be very quick and cause less economic damage overall. As weeks have gone by and the Fed has been forced to talk more about what their approach towards combating inflation is, the more convinced I have become that they want to force a recession to upend inflation. Let's talk about a little economic nightmare called stagflation. Stagflation is a condition where economic growth slows down relative to high unemployment, which is known as stagnation, while simultaneously experiencing rising prices, which is known as inflation, hence the combined name stagflation. As you see, these three macroeconomic variables have a huge effect on an economy, and are core to the overall measure of the GDP of a country. The United States has experienced stagflation before, with the most recent time being in 1970, which coincidentally enough, was a period when energy prices began blowing up and got out of control. I will not make a 10-minute video explaining what happened, so let me sum it up in one sentence. The OPEC, which quite literally functions as an oil cartel, decided to lead an embargo, and as a result, the prices of oil doubled in 2 years, causing countries like the United States, which imported a lot of oil, to experience high inflation. Over the next couple of years, after OPEC continued to mess around with prices, rising unemployment and reduced business activity meant that people had less money, but with high inflation, it compounded the damage made. The damage done to Americans was underreported, and a lot of changes in society took place as a direct result of those dark days. Bringing the topic back to the present, we know the three horsemen of the apocalypse that bring stagflation, which again are inflation, which are rising prices, stagnation, which is slower or flat economic growth, and an economy that struggled with high unemployment. However, economists still don't know, or simply cannot agree to one solid conclusion as to what exactly causes stagflation. The most common type is when there is a negative supply shock in an economy, which did just happen with the pandemic. When something as important, like energy or labor, drop in supply, things can get out of control really quick. The situation in Ukraine, as you already know by the billion of headlines made every day, have dramatically risen the costs of energy. With the events in Ukraine reducing the supply of oil that many countries are getting, prices begin to rise. Then other businesses that heavily rely on gasoline, like transportation, have to deal with an upfront cost that they did not anticipate. They then are forced to raise prices on their products, and this cycle keeps on happening over and over until you start to experience the weight of inflation everywhere. The thing that nobody wants to say outright is the following: we are experiencing stagflation, as the markets and politicians and economists are all looking at everything but the elephant in the room, because the moment it is acknowledged as that, we will most likely crash and go into a full panic mode, which will ensure a recession. The thing that makes stagflation so scary is that there are about 2 ways to combat it, and both usually entail having to make things worse so that things can get better down the road. There is no quick revive on this or easy solution the Fed can maneuver to fix this. The first way to go about fixing it would be to have the Fed raise interest rates to directly offset high inflation, which is what is happening. This is almost like chemotherapy for the economy, Because even though it kills the cancer cells, or in this case reduces inflation, it also breaks everything else down. Raising interest rates puts brakes on borrowing and investment. It can stagnate economic activity and will 100% of the time affect growth, which, as was already teased by the Fed, is already projected to decrease this year. The other way to combat stagflation, which was already tested in a way though without the intention of fighting it directly, is to have the government hand out stimulus checks, to directly incentivize the pockets of everyone with printed money. But this has the even worse effect of fueling up inflation, and since inflation is the ugly monster right now, we are going with the first one. But things have gotten even worse somehow. President Biden recently said that now he expects real food shortages to begin as a result of Russia's invasion of Ukraine. He said that the price of the sanctions is not just imposed upon Russia, but on an awful lot of countries as well, including European countries and the United States as well. Ukraine and Russia are major wheat producers, and as common sense dictates, there will be severe disruptions in the exportation of these products. Biden is said to be urging all nations to drop trade restriction that could restrict exports of food, but these things take time to change and already food supply shortages are beginning to be felt. The global economy is an absolute mess, and in no way can anybody tell you that things are beginning to look better or that the economy is in a full recovery mode when we haven't even stopped sinking. But alas, the mystery of the stock market perplexes the minds of everyone in the world. Stocks, led by the S&P 500, have begun recovering. The recovery hasn't been slow either, it has been explosive, catching even the most weathered investors by surprise. The news media has quickly come to lay down their narrative that investors are now hopeful in markets, that the war has been priced in, and that the key metrics of a strong economy have been overly undermined by sell-offs. Jim Cramer went even as far as saying the bear market is over, indirectly ushering in his millions of viewers to embrace the chance to get in on stocks before they go to the moon. But something is amiss. 2 + 2 isn't giving me 4 anymore, and I have become quite paranoid of everything going on. I thought myself crazy, so I took my bot brains back to the stock charts, and looked deeper, looked at what was happening, and came across a multitude of findings that have given me clues as to why stocks are going up while the economy is falling down a black hole. Taking a look at SPY chart on the weekly showed me a crucial finding. The explosive stock that has dumbfounded every economist out there has been getting less and less volume. Almost nobody is eating up what the media is telling us. Almost nobody is bullish on the stock market or the economy, and what we are seeing, probably highlighted by the market conditions we just talked about. The Fed tightening, the yield inverting, the war in Ukraine, slow growth, you fill it in. The more the prices break out upwards, the less volume there is, and this could mean that these major benchmarks will not be strong enough to break out of the key resistance levels that were cemented when they began breaking down around December. Many investors have begun citing this as a last push before things break down again and markets crash, but I will disagree to an extent. I think what is happening is that markets have simply begun pricing things into a degree, and have also begun aggressively buying to force shorts, which means retail traders, into getting margin called. This run could be the result of a lot of bear traders who took short positions getting squeezed, and big money intends on pumping stocks back up until they begin selling, which at that point they will begin selling as well. I don't think we will necessarily be breaking or testing a new low on benchmarks for the week, but this whole market rally pump is not likely to continue shooting up non-stop. I think this is a result of traders. We have seen this happen before. If you pull up the charts for the year 2020 or 2008, you will see that stocks began recovering slowly after a huge sell-off with even lower volume. They always recover, but the fundamental circumstances by which the economy stood at were largely different. The 2020 market crash was a panic reaction, and 2008 had a lot of the housing market involved in it. Though there are some of these variables affecting current economic and market conditions, the biggest factor here to play is stagflation, the biggest and scariest monster a government can face because, as explained, there are only 2 possible outcomes by which to deal with it, and they both require substantial and deliberate market and economic harm. It's one of those chop off the arm before you turn into a zombie from the bite you got kind of deal. The only reasonable and rational time comparison I can look for reference is in the 1970s when energy caused stagflation. I think we are due a recession in the coming months or years. I think markets have begun pricing things in for the time being, but this whole market rally has its days counted. I think we will be testing support soon enough, and I think big money is weighting things indifferently too. There is reason to think we will be range bouncing, which means trading between a strong support and resistance, for months with no real upward or downward movement until things get quote-unquote fixed, but we have yet to see how the government responds to this crisis, and if their response will be effective. I don't think so, because the last time the government began playing with interest rates, which was in 2018, they quickly found out how vulnerable markets are. The fact the Fed is raising them again now makes me think the government does want a recession so that they can quickly restore things back to normal. I am bearish on the market, and this whole run with GME has me puzzled too. Granted, there is reason to believe we could potentially see a gamma squeeze, and doing some basic technical analysis shows we were due for this jump, but I am not fully confident we are about to break past 300 again. I think shorters have been eerily absent from this price run, even when it hadn't started, and I think there is a reason for that. Again, I am long on meme stocks, and they are the best defense against a poor stock market and crap economy. They are my safe haven and my true investment. I will not cover technicals on GME or AMC because they have been running, and at this point it's impossible to measure support or resistance with these recent massive vertical candles. Stay strong and let's see what happens. I apologize for the late timing of this video, but I hope it gave you guys a lot of wrinkles. Let me know in the comments what you think about it, and please join my Discord. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day, keep on buying the dip into the moon.